Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and another crazy week that we saw markets kind of going here, there, and everywhere. I feel like it should be a Dr. Seuss story as we look at what's happened in this trade. So we are going to come back and unpack everything we've seen in this trade this week and what we see moving forward. More is coming up after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Well, welcome back once again as we take a look at what's happening in the market. We're getting comments today from Darin Fessler with Lakefront Futures and Sue Martin with Ag and Investment. And definitely a week that it has been. And I kind of wanted to start there, folks, is let's take a look at what your number one eye catcher was for the week. And Sue, we'll start out with you.
I guess it would have to have been the volatility that we've seen in the stock market. You know, it's been so volatile, and the market's been anxiously awaiting the release of the Fed's interest rate cut. And towards the before the report came out, it almost appeared the stock market was anticipating 0.25% rather than a half. We got the half, market rallies, then it turns around and breaks as hard, then it turns around and comes right back and makes new highs for the year. So I think that we look at the stock market and it's looking a little overpriced, but the key is the high end for the year? And it may not be, but we could have a good correction first. But yeah, I would have to say the stock market volatility was one.
Yeah, I think Sue nailed it on the head there. I think it was the interest rate cut. You could say, hey, a quarter point, scale it down as you go. I think where I was taken back is, boy, you came in here at a half a point cut, and it makes me wonder, okay, how weak is Europe? How weak is China then? If we feel like we have to cut a half a basis point now, I mean, it's a dual mandate Federal Reserve, where the first is to stabilize inflation. They obviously feel that they've done the good job doing that. And then the other mandate is to stabilize the job growth. Obviously, there's very big underlying concerns there. So the macro picture to me is still very weak. And yes, the VIX definitely went up in the S&Ps here this week. But in general, I do think with Sue, the S&P relative to gold even is probably a little overdone here and nearby.
So let's look at that. You mentioned a couple of the countries kind of looking in on us. When we see the fluctuation we've seen in the dollar, we know what demand is out there. Is there better opportunities for us to pick up some exports?
Which one of us do you want?
Go ahead, Sue. I don't care. Any one of you. Go ahead and jump in. Sorry.
Jump right in, huh? Okay. I would have to say, I think with the dollar in decline, and I think the dollar's got more room to decline. I'm looking for the dollar to move down to around 97, but ultimately, and I would have to say, if I'm right on this, that has to be good news for exports. I mean, we have to have very good news when we look at a cheaper dollar, cheaper interest rate, makes those letters of credit more doable for the foreign buyer. But also, I would have to say, when I look at the dollar softening here, you know, money's being pulled out of the U.S., and that would be what's helping push that dollar south.
What about for you, Darin?
Yeah, I'm taking the other side of this a little bit. I don't like to go against a whole lot here, but I'm a more friendly dollar here, more of on a macro geopolitical. If escalations rise in the Black Sea again, I think just as it was last time, the dollar, given how beat down it has been already, I'm taking more of the contrarian side here. I do think if we can stabilize around this 100.5 level, maybe works way higher. Because, you look at the managed money side of the dollar shorts, they are getting I don't want to say aggressive, but they have been short this market. So again, any type of geopolitical or geo-macro, I mean, if the U.S. is still viewed as maybe the safe haven, and if we have issues that are warranting a half a basis point cut, yes, that's bearish dollar. But again, how bad is Europe relative to the euro dollar, or even the yen, or even the pound? I mean, they kept the interest rates the same in Great Britain overnight. So to me, it's one of those things where the dollar's made its way lower here. More importantly, the dollar's made its way lower against the Brazilian real, and we do have some of the cheapest corn and beans in the world. So yes, the weaker dollar is definitely friendly U.S. exports.
So South America, I had read earlier in the day that they're talking about doing some abandonment of wheat acres because it is so dry down there, which leads to the next question. Are they going to get the corn planted like they would? Darin, have you heard anything in regards to their issues?
You're talking in regards to Argentina, right? Or Brazil?
Yeah. Argentina's abandoned acres.
Yeah, I think there's obviously an issue in both countries, to be honest with you. These rains need to materialize for some areas, and probably if you look at southern Brazil, probably a little bit too much rain. But I think instead of focusing so much on Argentina, I think if there is a South American focus, it should be Brazil. And, to me, I'm looking at, there's a lot of focus on, if we get September, get going here, if we're a little late, I think we need to pump the brakes on South America just a little bit here. They still have plenty of time to get this crop in the ground. But if it don't start raining here more consistently over the next, 4 or 5 weeks, we got probably a much bigger story developing in parts of central Brazil.
So then I'm curious. Go ahead.
I have to agree with Darin. I do look for Argentina, as we move towards the end of this year. We're looking for the La Nina to be engaged or formed by the time we roll into the turn of the year. It was interesting because there were some analysts, weather sources earlier this week that were talking about that La Nina had already formed. But there's several others out there countering that. And I don't think it has either. And if that has not, then of course, that means then that you'll probably see disappointing rains in the rainy season for Brazil, which starts around the 1st of October. And if they end up going through October into November and maybe get to the end of November and they look back and say, boy, these rains haven't been very good, that's going to set the stage for a later situation in looking at beans getting planted, meaning later harvest for beans gives us a longer export picture. Also means that you have safrinha corn planted later. This week on Wednesday, I had Ag Rural Consultancy out of Brazil here, and they had brought some producers from Brazil, and I gave them a market outlook. And this was one thing we talked about was the weather and how this rainy season coming up is so important because the rivers are record low. And it's even causing, like at the Rosario port, it's causing ships to have to load 15% less to be lighter so that they can make it in the port and back out. So that's slowing up exports for Argentina. So, and then you've got them talking about, well, they're going to plant less corn because of the leafhopper situation and what have you. Well, if they go into we go into a La Nina, that means hot, dry weather for them in southern Brazil, and then center Brazil and northern turns more wet. But that's, if I'm right, that's not till the turn of the year that we see that. And so there's a lot of question marks here. And I think Darin's right that sets a tone for this bean market, puts a floor under us, shifts it up, and also helps the corn market out. But, we're starting into harvest. Next week we'll be into harvest, I think, a big way in the States here. And everything I hear is much better than expected yields. With the exception, I've talked to a few producers in a little bit of Kansas and also into Nebraska, around maybe southeastern Nebraska and in there. And the yields are down about 20 to 30 bushel to the acre.
Well, and that's drying down so fast. I talked to some guys out in the semi-west part of the state they were doing a wet corn, and it was too dry for them to be out there harvesting at that point. And Darin, what are you hearing as well when we look at the dry crops and it's drying down just way too fast for guys?
Yeah, it's drying down a little bit too quickly than what most guys would like here. But the general consensus is a lot of inconsistencies. What I'm hearing, but generally, I mean, if you're, maybe guys had hoped for a 250 and it's coming in at a 230. But that's not a bad yield. And generally speaking, there is a lot of good corn and good beans, and I've said this for a long time. I think this is a very good crop. Is it the crop we could have had 4 or 5 weeks ago if it had rained and had a little bit better, temperatures? Yeah, I mean, it could have been a lot better. We probably wouldn't hear or see those type of disappointments, especially in southeast Nebraska. If you're south of Highway 2, those guys missed a lot of rain. But you get north there, across to interstate, and even south of Omaha, some really, really good stuff. I'm hearing some good stuff in north central Iowa, northwest Iowa. That's just 250, maybe up over 280, and central Illinois. It's just, boy, they're really good crops. But that's not a shock if anyone's been following that Illinois crop. And Minnesota's been. It is what it is. It hasn't been good since the start, and it's seeing that same thing during harvest here.
Well, and also
we've got to have. Go ahead.
There's one more thing. The weather forecast that I'm picking up is that we should start picking up more rains, and these rains will be heavier, and they're forecast to come out of a generous eastern half of Kansas. Pretty much the western half, north to south in Missouri, cover I want to say, generous half, maybe almost 2/3 of Nebraska on an angle, cut across a little bit of South Dakota and take in almost all of Minnesota. These rains are expected to be as heavy as 4 to 6 inch rains to maybe 3 to 4 type rains. And it's thought that this kind of a forecast lasts all the way into about October 10th.
As we get ready to wrap up, Sue, I wanted to ask you about the heavy cattle in the South. And are they going to continue to get heavy and knowing that they've got the advantage of the grain price right now?
Oh, I think so. We've had, I think until we get into a cold winter and if winter's really tough, then I think, maybe weights start to drop. But to be honest with you, I think cheap corn they're going to keep pushing the weights, and then the rally that you're catching on the board right now is very helpful. I believe what's happening in cattle, in the fats, is you're going for a basis change where futures are going to go premium over the cash market. And the product continues to weaken as we finish up with September.
All right. We ran out of time, unfortunately. I would have loved to have taken this conversation on a lot more. Thanks to both of you for joining us this afternoon.
You're welcome.
Thank you so much.
Nice to see you.
All right. That has been this week's Nebraska Soybean Board Weekly Market Roundup. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Soybean Board Weekly Market Roundup.